Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Friday, July 10th, 2009. Well, we're seeing a mixed bag on Wall Street today. For the most part, the markets are trading lower, although that wasn't really the case early on. We did see a gap down in the markets this morning after a little bit of late day selling yesterday took the markets off their highs. But as soon as we gapped down, we saw a massive surge on the markets as oil started to rally higher. We rallied really into the 9:55 a.m. Eastern time frame, and then ultimately we got the Michigan sentiment numbers out, all right? And the bottom line here was that the Michigan sentiment numbers were absolutely disgusting and horrible, to be honest, and it caused the market to really start to swing to the downside. And really what we saw was that oil started to sell off. As soon as oil sells off, the market generally will tank because ExxonMobil and the rest of the commodity stocks start to sell as well. So that's exactly what we saw happen and really continued on the downswing for the good portion of the morning. Right around midday, though, and this should be always, everyone should always know this. You guys follow these videos that I put out on all these different sites that you're watching it on, whether they're on our site or on a different site. You have to remember that Friday's volume will be extremely light. Just the way it is. So if you have a lot of selling going on, generally you will see an upswing later in the day. That's precisely what we've seen here. Now, the question is, well, why does light volume, give bias to the upside? Why would you possibly have an up move whenever you have light volume in the market? And the bottom line is, it's human psychology. Human psychology, human mentality is to always be positive. It's just a positive nature of the market. So regardless if there's no one in the market, you will generally see a float higher. That's, again, something like 65% of the time or so. 65, maybe as much as 70% of the time on the upside. It's not a huge winning ratio, but nonetheless, you do see that generally, especially when light volume gets to that point right around midday on a Friday like this. You can oftentimes see that. Now, as volume may pick up a little into the 3 to 4 time frame, sometimes you'll see a little adjustment in the market as it may sell off if volume comes back in. Maybe some people don't want to hold over the weekend and vice versa, but nonetheless, right now that's exactly what you've seen. The market currently is trading down on the Dow 52 points. The NASDAQ is lower by just a point, and the S&P is down about 4.5 points. Really, the Dow and the S&P 500 are down 0.5%, and the NASDAQ is flat. I mean, literally, NASDAQ is flat. You can see, again, what's happened is exactly what we've talked about here, with the market kind of bottoming out right on this dotted trend line. Now, this dotted trend line was a key support level we talked about yesterday and even before the day before, and you can see it coincides with this pivot low right here, and I can actually move it back. You can see this pivot right down here. 57.5 is that price, and you can see how that worked out very well right here on the pivot up, and then we broke through it. We got back above it, broke through again, then came up, pivoted down right into that level, and moved up. So that just 2 days ago is now coming into play very nicely here. As you can see, these tails match up almost identically with this little portion on the charts. All right, now just to go over a couple things, I want to go over a couple things with you guys as we analyze the charts a little more. Number one, we need to talk about support and resistances because there's a key level in the afternoon trading and into the close I want you guys to watch. That level is 88 on the SPY. Please watch it very closely. Look at how key it is. Yesterday, what was the low all day? Right here at the open, right after the open, right here. Multiple candles all hitting 88. Where do we close? Above 88 on the SPY. Go back the day before. Here we have an up day where we gap up, then roll over. Nice little W bottom there. Where do we close? Above 88. All right. Actually, in fact, we closed exactly on 88. The day before that, right here, we closed just above 88. So if you see the theme here developing, you have to watch this 88 level on a closing basis for the market, something very key. Now, does it matter on where we close? Or is it going to be a flush to the downside if we close below 88? Is it going to be a rally because everyone's going to get faked out on the upside? That's really for the premium subscribers in our research center to find out. We'll discuss that, obviously, in tonight's video and over the weekend to our premium players in the research center. But I just want you to watch that. That's a key level to watch. And there's a key thing that's going to happen if we close below it. Now, as I said, it may be a fake out, in which case you got to be ready for the upswing, or it could be just a continued down move here in the markets, and we'll analyze that and continue to follow it. Right now, though, notice the 88 level. We rallied all the way back up, stalled right on this blue trend line. This blue trend line was a major level going into the close yesterday, right at the open here. And you can see how we rallied up, paused right there, then broke through. We went right to 88, pulled back, 88 again, and pulled back here again. Now you're really focusing in between the 20 moving average here on the intraday 10-minute SPY and this 88 level right here, which is that line. If you break through 88 and get above it and take out this high, this is where you're going to go. You're going to go right to your 50 moving average. That will be resistance. If you get get through that, then you have a possibility of testing the upper range here at around 88.75, 88.65, right in this area up here, which is also double top from yesterday, and you can see a pretty major level. So the levels continue to work out with extreme, really just keen and continue to be exact and perfect on the charts. And again, on the downside, if you want to talk some levels, the 20 moving average and this dotted line here at 87.75, you also have the blue trend line. So there's a lot of support on this chart here, and the volume continues to be extremely light. So again, you have to anticipate that it's very highly likely that if you don't take out this level, you will go higher. And I would say that as a positive, and I'll mention that again. On a closing basis, 88 is key. But if we don't take out this level here at about 88.75, 87.75, excuse me, you have to have an upside bias until we take that out. If you take that out, then you look for double bottom. Simple as said that. All right, so just continue to watch that. And if you take out the double bottom, you're going to go down to 87 even number. Those are your levels to watch. But again, right here, there's a lot of support right here. I'll just draw an X right through it, because you have the 20, the dotted line, and this blue trend line all right here. On the upside, your resistance is also right here at $88, and then the 50 moving average. So watch that very closely, guys. We'll continue to analyze it for our premium subscribers in the chat room this afternoon, giving play-by-play. Feel free to join into that, and we'll get you guys all acclimated to the chat room. In addition, just an inside announcement before I continue here, the webinar is tomorrow, folks, so join up right now. You can go on our website under Education, Seminars, and Webinars. Click on that. Sign up for the Methodology webinar. This is where we're really going to discuss the in-depth secrets, a lot of the keys that we have. We continue to keep it very close to our chest, but obviously in the webinar we will divulge that stuff and give it out to those that sign up for that. And how to count, how do you do a count on? How do you know when the market's going to roll over? What candlestick count is it going to be on most likely? Things like this, cycle work, pattern work, really the hardcore stuff on development. It's kind of a hardcore workshop there, and we'll talk about that tomorrow in the webinar. 5-hour course tomorrow, starting at 1 p.m. Eastern time on Saturday. All right, so come join up. We hope to have you, and we'll talk to you guys soon about that. In addition, just a little talk about what's going on in the markets. You're seeing a little bit of selling. You closed right on the 20, but again, just notice where you closed this candle, and look at how much support you have. 20 moving average, dotted line at 87.80, and then blue line at 87.75. Sure enough, you're starting to see a little bit of an uptick. Again, as I said, if this gets taken out to the downside, then you look for the lows of the day right down here at around 87.40 to 87.50, and then below that double bottom down back here at 87 even number. But the ultimate level I will be focusing on, and again, I'll explain it in the research center, what this means is what this 88 means. Do we close above it? Do we close below it? What do they do? What does it mean? If we close above it, does it mean we're going to sell next Monday because it's a fake out? Again, that's really what we're looking at. Remember, guys, Friday volume is very suspicious, and you can't trust it. All right, key levels get closed above. Oftentimes, when too many people know about it, when everyone's knowing about it, it's going to be a fake out, and they're going to just whip it right out from under you, and you got to be prepared for this kind of stuff. The markets are not for the feeble. All right, bottom line. Yeah, if you're going to be in these markets, you got to know all the tricks of the trade. You got to know about the program trading software and stuff like that that's being utilized to really fake you out. It's not just a simple buy and hold type mentality anymore. If you're a buy and holder and you did that 10 years ago, you're back to where you started and you actually lost money based on inflation. That's the bottom line. So please understand that, folks, and we'll continue to update you in the premium chat room and obviously in the research center. Have a wonderful weekend, folks. We'll talk to you over the weekend. Take care.